Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the U.S. economy contracts for the first time since 2022 as U.S. President Donald Trump renews his tariff threats and attack on Fed Reserve Chief Jerome Powell.
And inflation is basically down, and interest rates came down despite the fact that I have a Fed person who's not really doing a good job.
Philippine inflation likely to settle between 1.3 and 2.1% in April, says the Bangko Sentral as food prices ease. We speak with Melissa Lopez, chief economist for ASEAN at Lundgren's Capital. And on this Labor Day holiday, we celebrate the fruit of decades of our labor and talk retirement planning with InLife's Jose Ang. The U.S. economy contracts in the first 3 months of 2025 due to higher imports and slower consumer spending. America's real GDP falls at a seasonally adjusted annual rate of negative 0.3%, according to the U.S. Commerce Department. Imports rise to 41.3%, the fastest since the third quarter of 2020, driven by businesses rushing to get ahead of President Donald Trump's tariffs. While consumer spending is at its slowest pace since mid-2023 at just 1.8%. Economists polled by Reuters had forecast GDP increased at a pace of 1/3%. Trump is asking business leaders more time to shore up the economy. And once again, he calls on Federal Reserve Chair Jerome Powell to ease rates.
And I think you have to get us a little bit of time to get moving, but this is the Biden economy. But we still had and we've had a lot of things happen since November 5th that helped this economy. Mortgage rates are actually down slightly, even though I have a guy in the Fed that I'm not a huge fan of. No, I mean, he should reduce interest rates. I think I understand interest a lot better than him because I've had to really use interest rates.
Meta and Microsoft post stronger than expected earnings for the first quarter of 2025. Sales of Meta Platforms, Inc., which operates Facebook, Instagram, and WhatsApp, reached $42.3 billion for Q1 of 2025, up by 16% and ahead of analyst forecasts of $41 billion. Meta stocks in NASDAQ jumped by over 5% in after-hours trading. Strong earnings appear to have blunted the concerns that Trump's tariffs would harm the social media giant's ad business. Meta now projects its revenue for the second quarter to grow between 8% and 16% year-on-year. Meta CEO Mark Zuckerberg told investors and analysts Wednesday the company is well-positioned to weather the economic uncertainties. Meanwhile, Microsoft's earnings for the first quarter jumped to $70 billion, up by 13% and ahead of analyst forecasts of $68 billion. Microsoft shares in NASDAQ rose in after-hours trading by over 7%. Microsoft is lagging among the so-called Magnificent Seven tech giants, with its share price rising by just about 2% over the past year. Microsoft CEO Satya Nadella attributes strong quarterly earnings to demand for AI and cloud computing, both essential in today's business landscape. And U.S. markets have ended the month in April mixed, overcoming early session declines following a weak report on U.S. growth. The Dow staged a late rally Wednesday to end the session higher by 1/3%. S&P 500 rose by about 1/10, and the NASDAQ ended down 0.1%. Both the Dow and the S&P are on their 7-day winning streak. U.S. Treasury yields have settled to 4.17%, and along with that, U.S. gold prices have fallen to $3,305 per troy ounce. Let's take a look at the U.S. futures markets. Looks like they're pointing to a higher open when trading begins, Manila time tonight, with the Dow, the S&P, and the NASDAQ all gaining by about 0.4% each. And Asian markets are opening mixed this morning, as you can see on the arrows there. The ASX 200 down. Kospi is on a holiday. The Nikkei 225 up about 0.5%. And the Kospi is closed for trading because it's also Labor Day holiday there. Investors are awaiting the Bank of Japan's policy decision out today, with analysts expecting that the board will hold interest rates at 0.5%. And Philippine markets here are closed Thursday for Labor Day. PSEI gained over 100 points in Wednesday's session, as you can see here. And meanwhile, the Philippine peso has returned to the 55 level mark, appreciating yesterday by 31 centavos to close at 55.84 to the dollar. Now, the impact of U.S. reciprocal tariffs on the Philippines will likely be minimal. That is according to the Department of Economy, Planning and Development Secretary Arsenio Balisacan. Balisacan said the Philippines even saw slight trade benefits because of lower tariffs compared to other Southeast Asian nations. However, he said the Philippines lacks the capacity to fully take advantage of these gains because of low investment. To attract more foreign investments, Balisacan says the country must fix issues in infrastructure, governance, and business regulations. He also said the trade deficit is not a concern if imports support growth through raw materials and capital goods. But weaker exports may impact first quarter GDP, which will be released on May 8th. The Bangko Sentral ng Pilipinas expects inflation to ease further at 1.3 to 2.1% in April. In its month-ahead forecast, the Bangko Sentral said this is mainly because of easing prices of rice, fish, fruits, vegetables, and oil. Improved local supply and a stronger peso also helped lower costs. If realized, this figure would be slower than the 3.8% recorded in April of last year. It may even hit its lowest levels since the 1.2% in November 2019. The Philippine Statistics Authority is set to release the April inflation data on May 6th. Now for more is Melissa Lopez, the chief economist for ASEAN at Lundgren's Capital, which has just won the prestigious Liipper Award for one of its investment funds. So good to see you, Mel, and congratulations for the award.
Thank you, Cathy, and thanks for having us. It's really a great recognition for what we do. The Liipper Award is kind of like the Oscars of the finance sector.
It is, and in fact, it is the best 5-year track record.
Yes.
Among China's stock funds. So the question really is, how do you sustain it with what's going on with the Trump tariffs, the uncertainties, and the realignments going on?
Right. Actually, I think the difference in what we do is we're really upbeat about the Chinese and the Southeast Asian markets, mainly because we believe and we see that there are really internal sources of growth that they can cultivate further at a time when everyone else in the developed world is slowing down. In China, there's room to boost domestic consumption, private sector growth, and really that's what we're seeing. And we focus on those high growth sectors and companies.
Yeah, but we got to also focus on the fact that China's just released its manufacturing figures,
right.
And that's a slowdown to its slowest in 16 months.
Yes.
So shouldn't that be a cause for concern?
Yes, we do recognize that, but we focus on about 45 hand-picked companies that we've really seen, studied the books, the assets from sometimes even before they list in stock exchanges outside China. So we know the trajectory of these companies. Of course, right now we're not as bullish with the manufacturing companies. More towards high-tech sectors is what we're investing in.
High-tech, but even that is going to be hit by the tariffs. So how do you work that out?
We look at countries or companies that look to other alternative markets. So we've seen China open up very recently a new trade route to Peru. So they're looking towards Latin America, and that is also a promising consumer market. We know that the US is 25% of world GDP, but you have the 75% that you can look to now that there's a tariff war.
And that's part of us. We're part of that
Yes.
75%, the Philippines. You can only imagine that the alphabet would be working in our favor. There's Peru,
Correct.
but there's also the Philippines.
Yes.
So how much of a chance do we have that extra manufacturing would move to the Philippines if it hasn't yet?
Yes, I know that it
Happen.
will take time. So it really boils down to what we can offer, and especially the ease of doing business, lack of infrastructure. The sooner that we can address these gaps, the more that we become more attractive to these relocating companies or setting up new or duplicate factories just so they could skirt the very high tariffs of the U.S.
And we also have to look at our neighbors because they're
Yes.
also competitive even before the tariffs came to be. All the manufacturers were going to the Vietnams, the Thailands, and ASEAN.
If anything, we are not the worst off in the set of tariffs from the Trump administration. Definitely 17% is better than the 46% in Vietnam. So we'd have to make it more attractive for these relocating companies to come to us. So that's incentives, that's fixing our infrastructure gaps, maybe lowering the cost of power and the cost of doing business in general.
And I'm thinking now about how difficult the job it is for Decgo and
Yes.
Chris Aldeguer to actually make a difference in the negotiations happening with the U.S. Trade Representative.
Yeah.
So what would be the best outcome, given that there are relative differences in 17%? I mean, Vietnam might be able to,
Yes.
pull that down to zero and
Yeah.
we're off the charts. I mean, we're off the list if that were the case.
Of course, anything closer to 0% would be beneficial for us. It would be growth positive. What I'm seeing right now is, and what's really not clear at the moment is what would the U.S. ask from us in return? And I'm thinking it's going to be more towards the geopolitical side more than financials because we do have a narrow trade surplus with the U.S., but we're not as big of a manufacturing hub as Vietnam with their garments, or of course with China, with basically everything else. So I believe that would be the direction of the discussions, but it's a matter of what are we willing to provide as well in return.
So it could be a leverage, our defense
Yes.
treaty partners' status, and the F-16 jets that we're buying,
Yes.
and all the other, military equipment that we're going to need. That's going to make a big dent on the trade figures. So where does that take us stand with the Bangko Sentral? They've already guided towards a lower range
Yes.
in the inflation forecast. How many more rate cuts are you seeing down the line?
I am actually.
If Fed Chief Powell does not move,
Yes.
despite the pressure from Trump.
Of course, the independence is very important. I see the Bangko Sentral cutting rates at least or at most one more time this year. Definitely not in June. Similar to the Fed, cautiousness will prevail. And we know that the BSP really kind of matches what the Fed does. And from the April cut, they've already matched the 100 basis point cumulative cut that the Fed has done last year. So now that inflation is easing, that of course bodes well. But also, you need to be more careful. Of course, the tariff situation could be quick in terms of pushing prices up. We've seen the U.S. contract in Q1 when it doesn't even cover the Liberation Day tariffs yet in April. So it's best to pause, maybe a 25 basis point cut, one more around the third quarter is what we're seeing.
30 seconds, 55 to the dollar. Is that cause for concern for the OFWs remitting home?
Oh no. We know that we look at currency at the long game, and it is a fluctuation, but it will correct down the road.
Got that. Well, thank you so much, and for joining us on Labor Day
Thanks.
holiday. Appreciate it.
Thank
Mel
you.
Lopez of Lund Green's Capital. And you're watching Money Talks. Coming right up, the Philippines trade deficit widens to $4.13 billion in March. And an agency that will regulate content creators and combat misinformation will speak to AI Council Philippines. Keep it here on One News. Money Talks. I'm Cathy Yang. The Philippines' trade deficit rose to $4.13 billion in March, its widest in 2 months. This was driven by higher exports and imports. Exports rose to nearly 6%, while imports is up by almost 12%. China remained the top source of imports, accounting for nearly 29% of total imports, followed by Indonesia, Japan, South Korea, and Thailand. Meanwhile, the U.S. led as the top export destination with nearly 17%, followed by Hong Kong, China, and Singapore. Despite export gains, semiconductors, the top export item, slipped by 3.8%. Meanwhile, imports of raw materials and capital goods rose, showing signs of economic recovery. For his part, Philippine Exporters Confederation President Sergio Ortiz says trade may stay volatile because of global uncertainties and U.S. trade policies. Metrobank posted an attributable net income of over 12.2 billion pesos in the first quarter, up by over 2% from last year. The bank saw strong gains from fees, trading, and its lending business, with loans growing 16% year on year. Despite the growth, non-performing loans stayed low at 1.6% and boosted its loan loss provisions. As of March 31st, the bank and its subsidiaries had over 900 branches and over 1,300 on-site and 975 off-site automated teller machines. Has recommended the creation of a digital council of the Philippines to regulate content creators and combat misinformation. The proposed body would be composed of content creators, advertisers, the Department of Information and Communications Technology, academe, and public relations practitioners. So that's basically everybody, with all hands on deck, with just 11 days to go before the midterm elections. With us now for more is the co-founder and trustee of the Global AI Council Philippines, a nonprofit supporting government and private sector efforts in AI development in the Philippines, former Trade Undersecretary Anton Mauricio. So good to see you, Anton. Thank you so much for joining us.
Good morning, Cathy. Thanks for having me.
All right, so you've just had a phone conversation with Congresswoman Geraldine Roman just hours ago and have discussed the creation of this anti-fake news groups. So what's the latest?
Yes, so the direction of the government is not to create an agency that will be viewed as censorship of media. It is meant to basically prevent abuses via fake news on social media, which affects our lives, from fraud to scams to even politically related matters, such as the coming election. The direction of the government is simply to try to regulate the actors or stakeholders in the ecosystem of social media so that fake news is prevented. So that will require something that is parallel to what the traditional media is already doing, such as the KBP, which is a self-regulatory organization in a way.
Okay, well, let's baseline that for a moment, Anton. What data do you have showing that there's more fake news now with just 11 days to the midterm elections?
The data is not with us; it's with the social media platforms. I'm talking about, Facebook, Meta, which includes Facebook and Instagram, Google. They are the ones with the data, and they were invited, particularly TikTok, ByteDance, and Facebook. Meta had been invited during the last TRICOM congressional hearings. And they showed during those hearings that it's not just these elections coming up, but historically the past elections that have had an uptick, meaning it may be combined disorganized and organized effort. But as Global AI Council, we don't have that kind of data. We are just an ecosystem builder.
That's all right. And that's so important, really getting that ecosystem together and getting somebody to just round everybody up. So who are your collaborators in this effort with just 11 days to go?
Yeah, so to continue, the way we are working closely with the government, but the government spearheaded in Congress by Congressman Geraldine Roman and the ICT under Secretary Atiaguda. We are trying to combat fake news by having a law passed, first requiring social media actors to be registered in the Philippines, no? Whether it's as an entity or an individual. The important thing here is that we will be able to find them should excesses or abuses occur.
I know that you drew something last night, and I really appreciate it because this is the first time the folks are going to see the sort of a process flow that you wanted to present to all the
Yes.
stakeholders of this anti-fake news group. So let's have a look at that. You
No.
could understand your handwriting if you take us
Oh my
through.
God. Yeah, this is really raw.
It's quite detailed,
Yeah,
but I know that we're gonna get to somewhere, and we gotta get this done in
yeah.
11 days. So take us through it.
So the idea here is to be able to identify how the source of the information and where the news is coming from. So it's either real news or fake news. In order for this to work, there has to be a process where we can make the airing actors liable. And that's what we are discussing with government. No? This will not work if it is just the social media bloggers or vloggers that we want to that we're gonna chase. No, it will only work if the major platforms are involved. As mentioned, like Instagram, TikTok, it, it not only those kinds of platforms, but especially the chat groups, Kathy.
Yeah.
The most popular chat group by far in the Philippines is Facebook Messenger, followed by Viber, and then the others follow. So what a lot of fake news actually spreads by putting it on the chat group, linking it to the platforms like Instagram and Facebook and TikTok. So what we want to do is to be able to identify any organized effort to spread disinformation or misinformation. So to clarify, uh, our role as the Global AI Council Philippines is to have technologies present in this ecosystem that will prevent the spread, hopefully in seconds, Kathy.
Right.
Just as a preventive measure, while we investigate if there is any truth to this allegation of fake news, because we cannot wait for weeks or even months. By the time the damage has already been done,
That's true. And we got 11 days to go, and that process flow, I'm sure you will refine together with all the stakeholders involved. All the best, and I hope to get back and speak to you again during the elections. Anton, thank you so much for joining us.
Thank you for the opportunity.
Anton Mauricio of the Global AI Council Philippines. And coming up after the break, we will talk about planning for your retirement with InLife. Stay tuned to Money Talks on One News. Welcome back to Money Talks. I'm Cathy Yang. Here are the headlines from around the globe. In the U.S., the Treasury Department announces the creation of a joint fund to fund the Ukraine rebuilding and provide Washington access to Kiev's natural resources. The deal was signed after months of fraught negotiations between countries. The agreement gives the U.S. preferential access to natural resources, and half of all profits and royalties accrued from the permits will be allocated for Ukraine's reconstruction. Still in the U.S., a federal judge rules that Apple has failed to comply with a prior injunction order that required the iPhone maker to open competition for app downloads and payment methods in its App Store. District Judge Yvonne Rogers of Oakland, California, says she will now refer the matter to federal prosecutors for a criminal contempt probe. The case stems from Apple's decision in 2020 to pull the account of Epic Games, developer of popular video game Fortnite, after the company let iPhone users navigate outside Apple's ecosystem for better payment deals. And in the Vatican, the Italian cardinal convicted of fraud will not take part in the conclave on May 7th. Cardinal Angelo Becciu says he will obey the late Pope Francis and will not enter the secret conclave to elect the next pontiff. Becciu was fired from his job in 2020 and sentenced to 5.5 years in jail over a $200 million purchase of a London building by the Secretariat of the State. Overall, there will be 132 cardinal electors entering the Sistine Chapel to pick Francis' successor. Retiring means giving up your regular paycheck, and it also means relying on the wealth that you've racked up throughout your career and making sure you live your sunset years comfortably. On the occasion of Labor Day holiday, we pivot our conversation towards retirement planning. With us now for more is Jose Joe Ang, the Chief Product and Innovation Officer of InLife. Good to see you, Joe. Welcome to the program.
Hey there, Cathy. Good morning, and thanks for having me here today, joining the program. Really good one, and apt really the topic today because it is Labor Day, and that I guess is really one of the big missions. As an insurer, typically people will think that we're really on the lookout lang if something bad
And
happens.
in fact,
to you.
happening at a time that we're all living longer. I mean, I'd like to think of it as a blessing, but which also means
Correct.
we all must think about how we can make the most out of our income during our working years and how we replace our income in retirement. So where do we start?
All right. Demographics-wise, we typically think top of mind when we start planning for retirement. And you'd probably say, well, maybe the 50s, 40s. But more and more, retirement planning is really more financial independence planning, where we want to map out our lives for much longer. We commissioned a study and found that actually for the Gen Zs and younger millennials, close to 25% of them really want to retire well before the 60s. 46 to 50 is kind of the target for about a fourth of them. And how do you get there, right? Because you don't just get there, one day you're suddenly ready, right? Demographics-wise, planning doesn't happen, in the sunset years. It's really coming earlier. And
Well, Joe, let me pick up on the Gen Zs because this will fall on deaf ears when you talk to the Gen Z kids. I mean, the Gen Zs do not see their professional lives stopping at age 60. They do not think that they will work for the same company for the entire career and then have a different path to retirement. They want to learn new skills, travel the world, have more choices. So how do you get them to plan for retirement?
So on that front, really, besides using social media to kind of inject, powerful knowledge and financial literacy, educating them, it really starts with, talks. There are partnerships we are forming with different client partners, corporations that we work with in InLife, where we try to get that message and speak to the employee force. It kind of shocks people. The first step when it comes to retirement planning is to know your number. Really, how do you want to live? Do you want to survive 50,000 a month, 100,000 a month, 25,000 a month? What amount will allow us to live that comfortable retirement life? And typically, it's easy to come up with that number, but how much you have to save to be able to sustain that tends to be a different story.
It is. It sounds like math.
That's when
it goes right back to math. The best of the worst or the worst of the best outcome is if you outlive your money. I mean, I've tried the retirement calculator online and see that a key part of the equation is that big variable called inflation. So how does one consult one's crystal ball on inflation when calculating against the risk of running out of money in retirement?
Yep. So this one is spot on, and thanks for sharing the infographics here. So this is available on the InLife website, and we try to make it a lot easier. Instead of sitting down with an agent, which is usually daunting, figure out the number for yourself, right? Come to the website, check it out. It's just a few questions. about your lifestyle, how you want to get there. And, we've preset some assumptions. So say inflation, typically we'd assume 3 to 4% where it's historically been for the Philippines the past few years. And that's something that people tend to appreciate more once you kind of compute it for them. We can talk about inflation, but if you don't show numbers, it's a lot harder.
That's so
and
true.
something that people appreciate more once you kind of make it easier for them to understand.
Okay, well, I appreciate that inflation is at a 4-year low, so that's where I'm at. But thank you so much for joining us, Joe, for making sense of it all and retirement planning. Joe Ang of InLife. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great Labor Day ahead.